You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. My name is Brian Overby. I'm the Senior Options Analyst at Ally Invest and author of the Options Playbook. All right. Well, we've had one heck of a week, and good thing that we went back to the well, I guess, last week and looked at a different bearish trade, this time only because we had done two long put spreads in a row. We went and looked at Netflix and did a short call spread, which is just another bearish trade. And until today, we are taping Options Playbook Radio. It is Wednesday, the 28th. The markets are closed. But today we had a little bit of a bounce back up in the markets. And before that, though, we had 6 days in a row of down days, and that happens very infrequently in the market to get that many days in a row. So because of that, we're getting a little bit of a dead cat bounce, to use an old term in the marketplace. And we're going to actually look at a long call spread just going into Friday to see if this momentum can continue. Not to mention the fact that we had the VIX spike up this past week, came up towards the 35 handle. Now it's trading right around 30, which just means that options are expensive. So we're going to stay in the S&P 500 index, and we're going to look at a long call spread in the S&P 500 index. We're going to make it a little different as opposed to some of the long call spreads or long put spreads that we've looked at recently. And we'll get into those nuances because, as always here on Options Playbook Radio, nothing's meant to be a recommendation. We're just looking at market conditions and trying to apply a strategy from the Options Playbook that may fit the current pricing conditions. And that's always our goal here on Options Playbook Radio, because we have 40 different plays in the Options Playbook. And you can't just talk about buying calls or selling covered calls nonstop, or you guys wouldn't come back to listen and get very boring in a hurry. So let's look at the Netflix trade, and then we're going to move on to the SPX trade or the S&P 500 trade. Okay. So last week, we looked at Netflix was trading right around 238, and we looked at a short call spread. So we went and looked at the most at-the-money straddle, used that information to get a little bit out of the money to go out and sell a $2.50 wide call spread in Netflix. Now, and I'm rounding off here. I don't think it was 238. I didn't write it down exactly or I didn't actually capture it in my screenshot. So it was fairly close to that. So we were about 7 points out of the money when we were looking at doing that trade. And we picked that September 30th date. And quite simply, we picked the September 30th date because it's still in September. And September overall is usually a tough month in the marketplace. Year over year, it is by far the worst return relative to the other calendar months. No real reason as to why. Nobody's ever came up with a great theory or a great rationale as to why that is, but it's proven time and time to be the case. And this September it looks like it's going to occur once again. Had a little bit of a strong day today, but like I said, 6 down days in a row. And so we're looking for a little bit of a dead cat bounce going into Friday. Who knows what happens over the weekend, but heck, we'll be out of the trade before then. Okay, so Netflix actually had some news today, and it is trading up quite a bit on that news. They actually ended up with 2 upgrades, and Netflix today traded up $20.84. Last trade was $245.20. What they announced today was an ad-supported tier for users to be able to join. So basically you can join at a cheaper level, but you're going to have to watch ads. And that prompted a couple of upgrades in the basically by Wall Street. So we were close, right? We almost got out of the trade unscathed, considering that since we did the trade, the stock has gone straight down. So with when we looked at putting the trade on, the market was rocking and rolling. Actually, we did it on a Thursday last week. We didn't do it on a Wednesday after the close, and the market went down just like every other stock. But today it really bounced back. We sold the 250, bought the 252.50, so we were 2.5 points wide, and we did it for a net credit of 50 cents to the account. Well, by my quotes here on the Ally Invest option chains, if I pull up that spread, it's now trading for 80 cents. So was many opportunities to get out at a dime or 15 cents during the bottom of this trade. And if I'm selling something for 50 cents and I can buy it back for a dime, I'm going to. So let this be a lesson to you, even if you are trading this on paper. Here is a great example of when you can take risk off the table. It's not worth it to try to save that last dime on that trade. Now, we might get out of this one unscathed because we're still just a little shy of 5 points out of the money on this trade. And it was a real strong move today, obviously up 20. Who knows if the momentum would continue? You have all day Thursday, all day Friday that you need Netflix to stay below the 250 level. So what would I do in this instance? First of all, I wouldn't really act until the market kind of went against me a little harder. A lot of people, when they do a short spread, and my goal usually is if I'm 2.5 points wide, and I mentioned this on last week's show, I'm going to try to get it done for 50 cents. If I am 5 points wide, I'm going to try to get it done for $1. These are just my risk reward ratios that I kind of like. And so if I do this trade and get it done for, it said here 52 cents, then if I can buy it back for a dime, I am going to do that. Now, on the downside is if it's trading against me and it's trading for $1, I would consider getting out. In other words, the maximum I can make on the trade was 52 cents. I don't know if I want to lose any more than that. And my biggest thing is if that's your approach, then just stay consistent with that approach. In this instance, we're very close to expiration, so you have a lot of options here. Tomorrow, there's going to be a lot of time decay that's going to happen in these option contracts because we're approaching the last 2 days to expiration. There's a ton of time decay, but it's also scary in that there's a lot of gamma on the options, which means acceleration. So if it gets in the money, it's going to go against you real quickly because the time factor is coming out of that option contract that we sold. And basically, it will start if it gets in the money fairly quickly, it will start running 1 for 1 against you. The delta will become 100. and it will hurt you in a hurry. Okay, so what do we do with it? I think to start with, I would just stay the course. We're so close to expiration that it's hard to adjust the trade. If anything, I would either consider staying the course, thinking about getting out, but I'm a little worried about the gap open tomorrow because this news totally blindsided the market. I probably would have closed it out today. If I was going to close it out, I would have closed it out before the market closed, just to take the risk off. Now, would have been a little bit different than my plan, but man, that was big news, right? A stock up 20 today. So I just don't want the risk of the opening trade. So we learned a ton about pricing on this Netflix short call spread. We talked a lot about probabilities and everything in last week's show. So if you want to get, it was basically a webinar on how short spreads are priced in last week's podcast. So it was all about education last week. All right. So before I get too long-winded, let's jump into this week's trade. So we have right now, if we look at the S&P 500 index, like I said, it was up today after 6 down days, and we currently have the S&P 500 index trading at 29. I'm sorry, that was the Dow. S&P is trading at $3,719.04, and it's up $71.75 on the day. So we're going to hopefully continue with that momentum, and we're going to try to take advantage of the fact that even though we had such a strong update, the VIX is still up around that 30 level. So if we go to the Ally Invest option chains, we're going to do a very short-term trade to try to keep that momentum rocking and rolling. And what we're going to look to do is use the nearest Friday expiration. So it's going to be the same expiration as the QQQ, or I'm sorry, as the Netflix trade that we're looking at. So we're going to keep it simple in that aspect. And with that expiration, the September 30th expiration happens to be the end of the quarter. It just happens to be that situation because we're at the end of the month. We're going to sell the most at-the-money option contract in our long call spread, and we're only going to go 5 points down, and we're going to buy a little bit in the money on that option contract. So now when we're doing this trade, what will happen is we're selling all the time premium of that at-the-money option contract as much as we can. And we're getting a ton of time premium. That at-the-money option contract with 2 days remaining is trading for, at the midpoint, we'll call it $37. $37 for an option contract that only has 2 full trading days to live. And because we're getting so much time premium, basically, if the stock just stays where it's at or drifts higher, this trade will be profitable. If it stays right where it's at, we're all right because we're going to be able to get this trade done for a net debit of $2.75 on that trade. That makes our break even $37.1775. $37.1775. And the market right now is $37.1904. So if you do the math there, that means if the market just stays where it's at, we will be profitable on that trade. That's what makes it interesting. S&P 500 index is a very intriguing index when it comes to option pricing, especially when the VIX is so high. The fact that we can get this done and have a real solid risk reward. I mean, I don't want to get too excited about it, but we're paying $2.75 on a 5-point wide spread, and our maximum upside will be $2.25 on that trade. So just an interesting, we're hoping that momentum continues. We hope that we can get into the weekend. There's not much that you can do on this trade. You're risking $2.75 to try to make 2.25. I got to be prepared to lose that $2.75. That would be my mindset on this trade. If it did go down to $1, maybe I get out of it, but I want to have that plan ahead of time. I'm not going to adjust this trade. You may be able to do an adjustment if it happens pretty early tomorrow morning. The S&P 500 index really has a tendency to hold its premium. So you may be able to adjust it, but that's not the way that I would really approach this trade. This is we're trying to feed off of the momentum of the market today. We're managing our risk by doing a spread, and that's the way it's going to work. So one last review of our long call spread in the S&P 500 index, with the SPX trading at 3719.04, up $71.75 on the day. We're going to look at the September 30th, this Friday, expiration, and we're going to buy one of the September 30th 3715 calls, at the same time sell one of the 3720 calls, looking to get it done for a net debit to the account of $2.75. That would be a midpoint. Never guarantee a midpoint fill. That means that we're doing this trade for $275 plus commission. On the upside, we have the maximum it could trade for is $5 minus the $2.75. We have $2.25 worth of upside, less commissions on that trade. That's it for this episode of Options Playbook Radio. If you have any questions you'd like us to discuss on the show, please send them to me directly at theoptionsguy@invest.ally.com. Thanks for listening. If you'd like to learn more about everything we do at Ally Invest educationally, please follow me on Twitter. My handle is @BrianOverby. And that's it for this episode of Options Playbook Radio. Until the next time, may all the options you bought finish in the money and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.